Okay, good evening everyone. This is Joe Henches with Beyond the Chart, and this is the stock market update, technical analysis stock market update for January 21st, Tuesday, January 21st, 2014. Okay, Facebook, we'll come back to Facebook. Let's start off with the Dow Industrials, which is down 44 points today. A little bit of a mixed market. The Dow was down most of the day today, and you can see we were down quite a bit early on. We took a little dip. And really was wondering whether this thing was going to go in the tank or not, and then it came right back. Now the S&P though was up. Let's see, what was it? I'm trying to remember. The S&P was up 5.1 points. Okay, so the S&P was up. I think the NASDAQ was up and the Dow was down. So it was kind of a weird day. And when you look at the Dow, basically you've got an outside day, okay? So you've got a higher high and a lower low. And, you know, we did have a little tight range in here. And so it's kind of, you know, actually it's higher and lower than the last 3 days trading range, okay? The highs and lows of the last 3 days. And then you closed down, but, you know, the SPX closed up. So I'm not quite sure what to make of this other than sideways consolidation. You know, that's the best take that I can have on this, is that it just looks like it's trying to move sideways. You know, we pushed up off this bottom, and we're just going to have to continue to just wait and watch. I mean, I almost feel like we're in limbo here in terms of what's going on with the market right now, because it's just, I think it's trying to figure out what to do, honestly. I mean, the S&P is going sideways. We had this one big down day here on January 13th, and other than that, we've basically been sideways. And so not a whole lot more to read into this one. Now, we still get this divergence. Now, and again, I've mentioned before, we can work off divergence by continuing to go sideways, or we can pull back. It looks like we're continuing to go sideways, and you know, hopefully one of these days we're just going to resolve this and push up to the upside. Now the NASDAQ, this is a picture that bothers me. I mean, I don't know, it just looks like it's vulnerable to me. You've got this DI plus here, which is the positive side of the directional movement indicator. You got DI minus, DI plus, and you're getting this, you know, as we continue to push to higher little lumps in here, this doesn't push to new highs. We're getting to divergence. So we get divergence on the 10-day RSI, okay? And then when you look at this kind of a doji, it's almost a hanging man type doji, but it's really not big enough to be qualified as a quote unquote hanging man candlestick formation or bar. But anyway, I mean, given that with the you know, the divergence that we're seeing. I know we're approaching these bars here. Let me take a look at. Those were the previous peak highs back over here in 2000. Okay, so we've got some potential resistance that we're running into here. And those were the rally highs in the year 2000 as we were rolling over and going down. And so we've got the opportunity for supply to come in here. And when you look at what this has done, I mean, it's one heck of a rally. And yeah, we've had a little bit of selling, but we've stayed in this channel, you know, since November of 2012. So we've been in this for almost 14 months now, mid-November 2012. So that's a heck of a stretch. We've had some other stretches where we've had that kind of move, you know, especially this coming off the major bottom in March 2009. But I don't know, the volume on this move, I looked at volume earlier, and the volume on this move is a lot less than it was coming out of 2009. So anyway, it just means that we need to be alert, need to be paying attention, and just be a little more cautious, I think, on the upside in terms of our upside plays until we get something that's really kind of setting us up a little bit better. All right, let's take a quick look at the volatility index. It continues to be low down here. The 10-day exponential moving average of the volatility index is at one of the lower points that it's been at. And let's see, where was that? Let me just tell you what, an easy way to do that is I will just put a bar, a line right where the low of the 10-day exponential moving average is. And okay, we got a little bit lower than that in March of last year, and that was about it. So we're down in pretty low range on the 10-day exponential of the VIX. The high-low, again, didn't do much today. I talked about the divergence that we're getting. I talked about that last time on the weekend. And the short-term trading index continues. We're getting some higher closes up in here to the high end of the range, which therefore we're getting the 10-day exponential moving average moving up. No new indicator on that unless this 10-day, this blue line gets real close to this green line, which would mean that we've got selling that has come in, but nothing as a new signal in there. So that's kind of it on a quick and dirty on the market tonight. We've basically just had one day to look at. Quick update on some of the trades. I know CREE had some earnings after the market closed, but we didn't break this low today, and I'm not going to sit with this. So I'm saying we didn't get a trade signal, so I'm taking the setup off on this. Not sure what's going to happen in the market. The way it did after market, it's probably moving to the upside if it continues tomorrow morning like it did here in the after the market. Expedia, we gapped down. I was expecting, I had said, look to buy at 70.69 or less, but yesterday, remember how I cautioned you and said, if we have big gaps on the opening, you need to use discretion as to whether or not you really want to get into that trade or chase that trade. And that's one I don't want to get into if it's not even confirming to me that I've got the right direction and it's gapping down by like 3 or 4 points. So to me, no trade on this, and not. We'll have to wait to see if something else sets up. And then Facebook, again, also did not break the low of Friday. Opened up and pushed up all day. So it actually had a nice move today, and it'll be interesting to see whether we can push, whether this little wedge is truly a wedge or whether this thing's going to push on up out of this thing. And right now, I'm just going to wait and see. I'm not really sure. I don't have a strong conviction either way, so I'm just going to stand aside. So right now, no trade, set up us off on Facebook. And that's really it. I think Citric Systems, CTXS, we're still working that trade. We're still in it. And that's really about it for tonight. Tomorrow, we'll take another look at, see how some of the Chinese stocks are doing, and take a look at the Shanghai Index again, and we'll kind of go from there. Thanks for stopping by. This has been Joe for Beyond the Chart. Have a great Wednesday.